Now that is some cheap VeChain. Guys, in this video we're going to be jumping down into the charts for VET to see what's been going on most recently and what I might expect to happen next here. Very interesting stuff. Guys, as I get into this, if you find it useful and informative, then hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Okay guys, this is VET paired up with USDT. We're on the hourly on the daily chart, sorry, and Binance is our data source. Now with this one, there's a few things that we need to obviously acknowledge. We've kind of got a big corrective pattern here. We have a bit of a bounce in this regard, and there's a couple of different ways of looking at it. I've got this as a WXYXZ. However, we can of course take a look at it from a much more simplistic point of view. Let me actually just tidy some of this stuff up. There's a lot of stuff on here that I just don't need anymore, so let me get rid of that. So if we take a look at it, we've kind of got ourselves a big kind of WXY in the sense that we have this pullback over here, then have this pullback, then we have this pullback. Okay, and the reason for this is basically if we take this low point, I say the reason for it, it's probably not the right terminology. If I take this corrective move here, we can move it over to here, and we can see that we have pulled back down lower than the 1-to-1, but we are approaching this 2.351, this basically being our 1.236. This is an area that we could be basically looking to bounce on from. Now the other way of looking at this as well is to take this low point over here. This is the 3.9, and we take it from that high point up here as well at 18, and we go ahead and throw this on top of here, and we can see that we are potentially looking at 1.8. okay, so those two things are vastly different. However, as we look to lower down ever so slightly, we can see of course areas that we might be resonating incredibly well with. As I pull this down ever so slightly lower, that would basically mark a 93% retracement, and these are very much the bear market lows that we had seen historically. Okay, 95% is pretty much where these things actually have tended to bottom out in the history. Okay, so one of the things I guess that I really want to kind of articulate in this video is if we are in a bear market, which I think is hard to argue for many altcoins, they definitely are in a bear market. Okay, that ultimately this is the end of the bear market. It's not the beginning of a bear market. Okay, and obviously that might feel very different based on what your expectations of a bear market are, right? So when we were experiencing this back in March of 2020, this is that last pullback, right? You have your bearish scenario over here, right? You're pulling down, you're bouncing around. And then you had this pandemic crash, right? This straight drop down. And if you look over here, what you've got is this, we're bouncing around, straight drop down. This is the end of that bear market. If you think about the bull run and you have that parabolic, that blast off the top that people talk about, right? This is the reverse of it. This is the blast down, the parabolic move down, and we finish it off, right? So for this, we could be looking at anywhere between kind of 1.8 and 1.2 in that low point. If I actually bring this down, you can kind of see that would basically put us at 95% if we were to go down to 1.29. 1.875 should be the actual bottom of that, in my opinion, on the 1-to-1 ratio. So if you take a look at it from here on this daily, you have this A, B, and C structure coming in here. But as I often say, it doesn't generally matter whether you dollar cost average now or you dollar cost average later. Okay, and the idea is not to do one single big purchase unless you are a whale in this space. The idea is to basically solely dollar cost average in the same way that we talk about dollar cost averaging out of the market. Okay, so buying a little bit at 2 cents, buying a little bit at 2.5 cents, buying a little bit at 2.9 cents, right? Basically just building a position, building the number of coins in your portfolio. Don't worry about the dollar value, only worry about the average price you've paid for a project or a token or a coin, and basically make sure that that average lowers down over time, right? So you always buy a lower price effectively. Now of course, if you can do this the other way, you can wait for reversal and you can dollar cost average as the market moves back up again, and your average price will actually increase as you do that. And it's it's also a very valid strategy. You have the benefit of knowing that the bottom's in and you're already kind of seeing good structure move back up. Alternatively, most retail investors will be looking to dollar cost average on the way down, and it is these moves on the way down that we absolutely want to be doing that in. Okay, there's lots of people out in the space saying, oh, you're in a bear market, we're a multi-year bear market. I'm sorry, but if you're in a multi-year bear market, 93 to 95% is still going to be the bottom, right? History tells us that, right? And we've already been in this bear market for a pretty significant period of time. It goes well over a year at this point, okay, and that is historically also very accurate with their previous bear markets, right? So where we are right now is a really, really interesting point, specifically for Vechain, as we start to approach areas that Chris and I were dollar cost averaging way back, okay? I mean, we were actually more down in this range below 2.2. So if we start coming down to like 1.8 or lower, like 1.2, you're right back where me and Chris were buying Vechain back in 2020. Okay, so really significant reductions. So really good stuff to hear, to see this, obviously where we're heading. And, you know, I think this is a fantastic opportunity to be dollar cost averaging into. Unless we're throwing big money, you know, 100,000 or more into the market, dollar cost averaging at 2.6 or 2.2 or 1.8, it kind of isn't going to matter too much, because the percentage gains that we're going to see going up are going to be very, very significant. If we just take the current price, for example, and we were to buy all right now, and we were just to revisit the previous all-time high, we are talking 969%. That's practically a 10x just on going to the previous all-time high. Okay, obviously when you have these bullish cycles, they tend to go much higher than the previous all-time high. So do bear in mind that we might pull back down lower. It might come down all the way to that 1.8 cent area, okay? And if it does, and we go up to the all-time high, when we are, of course, talking about, you know, 13x's, nearly 14x's. If we go down to 1.2, we're talking about, you know, 2,000%, 20x, okay? So there's a lot of fantastic things that come in the future here, but this is where you want to start dollar cost averaging, in my opinion. It's important that you understand that I'm not a financial advisor. I cannot give you financial advice, but we are getting right into that sweet spot for dollar cost averaging. A lot of people would have already started. Anywhere around 3.9 was making perfect sense. Anything lower than 80% reduction from all-time high for most retail investors is a really good, solid place to start dollar cost averaging. But keep your dollar cost averaging to start with. If the altcoin is 80% from all-time high, then keep it small. Don't do too much too fast. Slowly dollar cost average over a period of time, and then basically you'll lower that average price, and you'll find you'll basically have a really good position in terms of tokens and coins, and by the time this actually starts to reverse. Okay, so when it comes to strategy, that's the kind of thing that you want to be looking at. Now, if you're looking for a little bit more in terms of bear market strategies, you know, portfolio reviews, project reviews, trading, join the Patreon services, linked in the description below. Join us in Discord. Discord's completely free. It's a fantastic community, and we do a lot more down in those areas, so why not go ahead and check them out. So let's jump down into our hourly. It's obviously not a pretty view. And we can see this breakdown here. I'm going to tidy this up because obviously we've now got a different structure appearing here. So I want to just kind of make this really clear. Let me just get rid of that. So we can kind of see this big kind of pullback here, right? So this is fine. This is an A, B, C. We can see that. Here we obviously have this decline, right? This is an interesting move to the downside. It kind of slips down, right? We can see that little curve to it. Bounces up and then pulls back down again. But essentially this is the bounce right here. So we can take a look at it like this. We go down, we move up, we come down again. Okay, there's nothing overly more that you can kind of look at that in any other way, right? There's some sub-wave counts that you might get drowned in, but for the most part, you don't necessarily need to worry about that for the most part. Instead, we want to just take a look at it from this perspective here, move that over, and you can see that we've come down past the 1.382. So a bounce anywhere around here could be seen. We haven't come down as low as 2.2. There's going to be support here, but this is also a 1.618, 2.291. So if we were to happen to come down into that low range, I would expect a bounce at that point, and that would actually mark us up as an impulsive trigger point, where we could see this ending with 5 waves. And if we take a look at all of this, this is all corrective, but again, we could say 1, 2, 3, 4, and 5, 3 waves up. We could be looking at a 5-3-5 structure inside this last C wave coming down. Lots of different ways to kind of look at it, but I do expect us to pull back down into those low ranges, as said, with the 1.8 being the most probable area that we are going to come down to. That would be 93 cents at this point of recording. So guys, I'm going to leave the video there. It's a brief one today, but if you have found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.